Well, earlier this week, SAC Capital Advisors, one of the biggest hedge funds, pled guilty to insider trading charges. It agreed to pay a record fine of $1.2 billion. The lead prosecutor said the settlement proves no company is, quote, too big to jail. Karina Huber looks now at whether this case may now serve as a strong deterrent against future illegal activities.
In 2011, Raj Rajaratnam, founder of hedge fund The Galleon Group, was convicted on 14 counts of conspiracy and securities fraud that allegedly netted him over $60 million. He was sentenced to 11 years in prison. A 10-year investigation into hedge fund SAC Capital has just resulted in an admission of guilt. The firm has agreed to pay $1.2 billion on top of the $616 million it paid to settle SEC charges in March.
It sends a very clear message to everybody that the government is out to, get the people who are committing crimes against the markets, and if they do that, they're going to be fined quite extensively.
SAC's admission of guilt is unusual for the industry, but the government has made it clear it will no longer accept a monetary settlement without such an admission. Strockman, who has written numerous books on hedge funds, says the government's new tough tactics, including the use of wiretaps, may cause financial firms to monitor their employees more closely and beef up their compliance departments. But he doesn't believe the convictions will do much to deter insider trading.
If people want to be criminals, they're going to be criminal. And if they think they can use their inside information to get an edge, they'll do that.
Law professor Howard Myers agrees. He says the temptation and the pressure to perform is too great.
There's folks in the industry that represent large amounts of capital. One way to goose performance numbers is through the fact that they might engage and be tempted to engage in insider trading, which could have obviously unique benefits.
Myers and Strockman believe there's nothing the government can do to stop insider trading, but penalties will be more severe and convictions more common. Whether SAC Capital survives is anyone's guess, but founder Stephen Cohen is not in the clear yet. He still faces a civil investigation by the SEC that seeks to bar him from the industry for good. Karina Huber, CCTV, New York.